Welcome to Trade Pro. This video is all about the absolute best way to trade any market and any time frame. Understanding this way of trading is so important for anyone interested in being consistently profitable. I believe looking at the market in the way I'm going to describe will exponentially increase your chance of being a successful trader. So hang tight and get ready for how stupid simple this is. It is really simple, but that doesn't mean it's going to be easy. Before I get any further into things, just be sure to use my Bybit link in the description of this video if you want to support the channel and start trading on the best crypto exchange. Now onto the main topic. First, I have some simple truths I want you to think about. Don't worry though, I'm going to be talking about an actual strategy in a little, but I want you to be thinking like me first. Got to get in your head to the right place. I'm trying to get your head in the right place. So this might seem dumb, but trust me, this is important. Let's think about looking at any chart and being able to see the future price data when when are the best times to short and when are the best times to enter long? Well, obviously, if you can see the future price data, you'd say, well, I'd short this high up here, I'd short here, I would short here, I would short here, and I would buy long on this dip, buy this dip, I would buy here, and it's obvious, right? So what if I told you that these are the trades that I really took? What if I told you I actually went short right here on euro against the US dollar? Well, I really did, and it's using such a simple concept of trading. I called it in real time on my Patreon page, this exact trade where I shorted euro against the US dollar right here. So let's get into this a bit and talk about this really important, simple concept of, trading and viewing the market in general. And, I'll give you a little bit of a strategy as well. So it's not going to be just, concepts and stuff, because I know a lot of people want, they want an actual strategy to go out and trade with. But the strategy part isn't as important as just the general concept that I'm teaching. So let's get into it. All right. Major concept number one, you're using overbought and oversold the wrong way. The right way to think about it is in a downtrend, there's no such thing as oversold. In an uptrend, there's no such thing as overbought. In a downtrend, there is only overbought, and in an uptrend, there is only oversold. Thinking about it this way is extremely important. And let's just get into an example of exactly what I mean. If you look at any trend where we're using the 200 EMA as the thing that determines the trend direction, you can see when price goes oversold according to indicators, it keeps on going, it keeps on trucking. Price doesn't care about oversold in a downtrend. So where does price first go oversold? Right here on this candle, it goes oversold. Keeps on trucking. Where does it go oversold? Right here. Keeps on going. How about we think about it in a different way, the right way? So we're only going to be looking for overbought if price is in a downtrend. We only have a concept of overbought in a downtrend. It's a major concept that I want you to be thinking about. And if we utilize this, we're looking for the RSI or any indicator to have cooled off and gone either overbought or above the 50 level. And you can see in a downtrend, price below the 200 EMA, there's only such thing as being overbought. You want to short the times when there's overbought in a downtrend, and you want to buy oversold in an uptrend. Let's take a look right here. When does price go into overbought? Right on this candle. Well, kept on trucking, didn't it? Even though it was overbought. Even with divergence, there's already divergence all the way down here. Bearish divergence keeps on trucking. No such thing as overbought in an uptrend. No such thing as oversold in a downtrend. And that's the concept that I want to get across to you guys. Concept number 1. Now let's get on to concept number 2, and then we can talk a little bit more about an actual strategy. Concept number 2 is the overall theme that the best way to trade, the best trading strategy that there is buying dips in uptrends and selling pullbacks in downtrends. Now, an extremely important part of accomplishing this successfully is having rules that tell you what to do. So something like a 200 period exponential moving average that can tell you the trend direction is important. You need to have an objective and rules-based strategy that, is going to tell you what to do and when to do it. But the overall theme of trying to accomplish buying dips in uptrends and shorting pullbacks in downtrends, that is an extremely important one that should be stated and understood. So figuring out the best way to accomplish that, that's another story. And as earlier I was saying, looking for overbought in a downtrend and looking for oversold in an uptrend, that doesn't mean the indicator goes below a certain level or goes above a certain level. That's not what I'm talking about when I'm saying oversold or overbought. I'm more talking about just the idea that the indicators have cooled off and the trend is ready for a continuation move. So how I want you to think about these movements is impulsive moves in the main trend direction followed by correction moves or cool off moves. All right. So we have these impulsive followed by the corrections, impulsive correction, impulsive correction, impulse correction, impulse, larger correction, impulse correction, just over and over again. Impulsive moves followed by corrective moves. And we're trying to get in on these corrective moves where the price and the indicators have cooled off a bit and they're ready to continue the run. All right. Now let's talk a little bit about, strategy and, how can you use indicators to your advantage to determine when price has cooled off enough. All right. Now for an actual strategy that you can start utilizing in your trading, how do you actually accomplish all of what I've been talking about? How do you, short on the pullbacks in downtrends and buy the dips in uptrends? How do you do that successfully? Well, obviously you need some tactics. You need a strategy. So here's something that you can do and add into your trading arsenal that is really helpful and I believe is a very valuable way of trading. So first is the multi-time frame approach and using the lower time frame to spot regular divergences pointing in the same direction of the main trend. So let me break it down a little more for you. We have the hourly time frame on the left-hand side here, and this is going to be my chart that determines the main trend direction. So as you can see, I have a 200 period exponential moving average. Price is under the 200 EMA. And remember, we're looking for pullbacks in price in order to enter a trade. But that's what we're going to use the lower time frame for, to get a precise entry in line with the main trend. Okay. So this pullback right here, of course, how could we short this pullback? How could we short this pullback here? How do we get in for the continuation of this main downtrend? So let's go over to our 10-minute chart. And now that we know the price is in a downtrend, it's below the 200 EMA on the hourly time frame. Let's go down to our 10-minute, and what do we see here? When would be the most opportunistic time to enter into a short position? Well, you could spot regular bearish divergence on the RSI of the 10-minute time frame or a lower time frame. Each pullback is going to be of a different size, so sometimes you might have to use the 15-minute time frame or the 5-minute time frame, but that's going to be up to the individual size of the pullback. but we get that bearish divergence. So price makes a higher high, RSI makes a lower high. That's regular bearish divergence. And that gives us the best opportunity and a good place to enter in to this trend, okay? Now, if we go to the next one, we get this big pullback, and we can look to the time where we get that divergence. So we get the higher high on the price, but at the same time, get the lower high on the RSI. And we get it again, I believe over here. Yes. Get another one here. We get it again over here. And we get it again over here. So all of these opportunities to enter at discounts or good prices into this main downtrend. And what I recommend is using the hourly time frame as your main trend direction, as well as your place where you're going to choose your profit target and your stop loss placement. So that is the tactics. That's my, that's the tactics I'm going to give you guys, leave you with in this video. And the overall concept, can be done in many ways. You can achieve, buying dips and selling pullbacks in many different ways, but I found that this is one of the best ways to do so. So thank you guys for watching. I hope you learned something. If you don't already trade with the main trend direction, you should start doing so. But if what you're doing is already making you profitable, then keep on doing it. Anyway, thank you guys and have a great day.